The internet clothing retailer ASOS has come out with a trading statement for the last 4 months of 2022, and things didn't look particularly good in terms of the numbers. It saw a drop in sales in the period, following on from that first half loss that it saw back in last year's trading environment. But if you look at the share price chart, you can see it's gaining. Let's take a look at the numbers first of all, because I think it's worth looking at what the company was reporting. Total group reported revenue down 4% for that last 4 month period of last year. And the guidance for full year free cash flow is unchanged. But if you take a look at the share price chart, I want to look at long term first of all to show you this blue box here, which was the gain the company made during the COVID lockdown. Since then, there's been all sorts of problems. But if you look at the share price rise today that we've got, this is the gain that we've got at the moment. It's up almost 16% on the trading day at levels they're not seen since the middle of November. And what this is all about is the management commentary around where the company goes from here. And it says it's in a turnaround and things are looking pretty good, it says, for 2023. The company is looking at ways of trying to force people to pay to return goods. So if they over order in order to try to buy and then return goods, the new regime at ASOS and indeed many of these internet retailers is that they'll then be asking people to pay for the return of goods. Otherwise, they pay for the full order that was delivered. So this is a way, I think, in which that the company can start to see some benefit in 2023. Whether or not that will dent overall demand remains to be seen, but the strategy seems to be moving in the right direction for investors.